RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. What is this? This is our, I don't even know, what do we call this? The short show. The pre-Afterparty show. Anyway. A little bit past 9 o'clock on the West Coast, 27th of June. Actually, a little bit distracted by other things in life, so not really trading in earnest, and was on vacation last week, kind of poking around, and did a little bit of sim trading this morning, and I can see that I'm still very cobwebby. So a little disappointed that just taking trades willy-nilly in the sim. Shouldn't be so willy-nilly. But anyway, I suppose it takes a little bit to get back on your feet and get going again. So always a good idea when you do take a vacation to very slowly come back into the market. You don't want to blow yourself up and lose a bunch of money right away. But it was great to hear in the day trader room at TRI, a couple of our OGs just doing very, very well. Big shout out to Neck of a Pencil. Pencil of a neck? Neck of a pencil? Anyway, Andrew, he got recently funded by one of the prop firms that, I think it was my old prop firm that he went and tried out at. So congratulations, Andrew. And it just goes to show, if you do what we actually train you to do here, trade your setups, follow your plan, don't take no wooden nickels, all that kind of fun stuff, well, you can do pretty well. Our day trader room sort of quarterback, Craig, he's just motoring along, doing his thing. So he had a pretty good morning. It was really nice chatting with him. And then we have one gentleman in the day trader room who trades Bitcoin quite a bit, but he got hit with COVID again. So he's been kind of MIA lately. So just ice. Hope you're feeling a little bit better. Take it easy, bud. So it was actually nice to be back in the day trader room, in the day trader community, but I can definitely see my day trading setups. In fact, even my journal note here. Keep in mind, I think it's a good idea that everybody, if you do want to be a day trader, you got to set yourself up with a tracking log, somewhat similar to this spreadsheet that I have together. And unfortunately, you know, my logging was started sim trading and lost 4 trades in a row on the sim. So that was a message to me. And the irony of it all is I went through my process first thing this morning, and I didn't really have any trade locations. I was totally trying to force trades, and it was just not healthy. So thank heavens, wasn't risking any real money. But lots of demon finder, I guess, entries for me to post this morning. If I'm not, and I've just noticed this about myself, if I'm not at a 4-hour trade location, then probably the best thing for me to do is just leave the market alone. As you can see, I did have a note here that the stock market, and this is the stocks, this is crude, this is gold, and this is ES, for whatever it's worth. And while I didn't have a trade location, because I do best when I like sell against significant resistance highs and then buy against significant support lows kind of idea. So you can see here we are. We did have a potential double bottom come in, and that's what I was trying to trade this morning. And I was trying to thread the needle, and very sloppy, and I got stopped out repeatedly. Boo, this is boo. So Brian's definitely getting back into the groove. If anything, I don't know whether you get any value out of that. It's probably better that I be completely honest and straightforward with you guys rather than bullshitting you and telling you what a wonderful trader I am when right now I'm sucking horse you-know-what. So anyway, that's the way trading goes sometimes. Coming out of the morning session, like the news today, actually I didn't really see a lot of quote-unquote news that really sort of, rocked the world. I did notice a couple anecdotes. I think that FTX guy, they're scrambling to try and find more money, and I think they found a whole bunch more money. So I wouldn't be surprised by the time this damn thing goes to trial that they probably dismiss it all because the guy bought so many politicians. But anyway, I don't even know if that even made the news wires. I suppose it's a bit of an odd situation over there in Eastern Europe, but from what I understand, Ukraine is actually starting to take back land in earnest, regardless of the crazy stuff going on inside of Russia. Did see that, we'll talk econs in a second, but did see some of the inflation data coming out in Canada was a little bit tamer than previously feared, but the US numbers, not really heavily inflation pressure, but I don't see how the Fed can lower rates, but we'll get to that in a moment when we talk econs. See, I don't know if they're, interesting to see how Mr. Trump's coming back, sort of all full of piss and vinegar here. And he's almost just like brushing off all of these attempts by various different special interests to try and derail him. I don't know whether you really call that news or not. Is interesting to see that crypto, and not a big surprise, but crypto is trying to sort of reform itself. And as I've said repeatedly, I believe that the SEC is being used as a sort of political tool to try and secure the monopolies, their monopoly here in the U.S. market. And of course, that's anything to do with sort of these G8 countries, Western civilization, whatever the hell you want to call it. So what a surprise. Now we're actually hearing that brokerage firms are now going to try and weasel their way into the market here. And if I understand correctly, what a big surprise. Mr. Fink, I think basically got the green light from the SEC on his ETF listing. So anyway, not a big surprise. The 1% sort of securing their monopoly, and that's in the crypto space for the coming cycle. And if anything, I have a funny feeling this is the cycle where the public is going to get absolutely destroyed because of price inflation. So, we've shown you studies from 1940s, which I think this cycle is basically a replication of that. You could probably also go back and look in the 1860s and then the 1780s. It's basically that 80-year great reset that you hear Klaus talking about and stuff. And unfortunately, the latter part of the 1940s actually was even worse inflation push than the beginning of the 1940s. So if you thought the inflation was bad there a year or two ago and the ramping up of prices, you haven't seen anything yet, which kind of sucks. But that's the whole reason why we're in Bitcoin, right? Today's after party, it is Tuesday, and speaking of crypto and Mr. Crypto, we have TRI's CTO on the call on Tuesdays. So once I'm done here with my little short market review video, we'll pop on over to the after party and hang out with Sjord for a bit. And Sjord, you want to say hello to these good people just to give them a little teaser?
Hi.
All right, there it is. Hi. That was a little teaser.
Yeah. No,
Anyway.
looking forward to the after party. Great, a lot of stuff to update you guys on. So looking forward to that.
All right, so there you go. Did see a few people actually sign up for the service, the dashboard, the breadth indicator service. I don't know. I think the breadth had a little bit of a hiccup overnight, so we got to be a little careful with some of the data that we're seeing. I suppose we'll talk with Stuart about that earlier. But with regard to crypto, still pointing up. I won't show you the indicator. I'm not really supposed to anymore. So the long and short of it here is we did have quite a a buy signal come in on the algo. Where's the best way to show you this? Let's see. I think on these charts I have it noted somewhere. We had a buy signal come in over here, and it was a little bit choppy, but nonetheless, haven't got a sell signal issued just yet. But I am getting a bit concerned here for the Bitcoin market. But you know what? We'll circle around to this after we're done with the econs and stuff. So we'll come back to this in a moment. What I will say with regard to econs, and I don't know whether you saw, but the stock market, as I had said, I mean, I actually would say, and this is the worst. I hate this when you're trading. I actually had a pretty good inkling. This is the daily chart on the ES futures. That we had a little bit of a, look at that, even now after the fact. I was hunting for this long, and I just kept getting stopped out. But actually, it turns out that thinking long was the right trade. But unfortunately, I'm just not in that. But what I noticed first thing this morning, I mean, this was a V top through the options expiry. Market just basically was straight line down. Came into a whole bunch of support lines. Of course, Mondays, monkey games at support levels, trying to wash out weak hands. And then you notice overnight we put in a nice little double bottom. And this was the rally I was trying to capture this morning. It's just that the cobwebs screwed me. I can't really come in and justify buying that now because we're at trendline resistance, two different trendline resistance, and a moving average resistance. And I suppose you could make an argument of 4-hour horizontal support and resistance level there now too. So stock market had pretty good morning. And why? Econs came out today pretty good, I'll have to say. First thing this morning, of course, I like to do the news right out of the gate. So durable good orders beat forecasts. So we had some new orders for U.S. factory durable goods jumped 1.7% in May. That on an annualized basis, that's like a 10-15% increase in durable goods orders. Of course, these things are up and down like you know what. But the point here is that this was also on the heels of an upwardly revised report for April and beating expectations of a 1% decline. Like, holy moly, what a swing. If anything, this kind of data, there's no way in hell the Fed can even think about lowering interest rates. And then the question ultimately is, does this still sort of translate into inflationary pressure? And we've talked a little bit about what's coming down the pike, but on Friday, we have really the employment or the inflation report that everybody's sort of humming and hawing about, the personal consumption expenditure index out of the Fed. This is sort of their preferred inflation gauge. As we had sort of said, the economic data itself coming in very strong. I don't know whether this thing's going to top out and break down or whether it just continues along, but we've even put out sort of tweets and stuff lately saying that as long as this thing has not emmed out, it's very hard to believe that the Fed down in the States is going to be done. And they've sort of even told the market that they're thinking about raising rates at least a couple more times. Could we have a bit of a pause here in the market through the summer? Maybe. The Canadians I don't know whether they're a leading indicator or not, but did notice econ or Canadian inflation data did come out today, and it came in a little bit softer than expectations. So 3.4 was the headline inflation number. Market was looking for 3.6, and of course that's a substantial drop from the previous report. The month-over-month inflation rate still relatively sticky up top here. It is coming down, and it's a substantial drop from previous reports. So the core inflation rate actually, and this is probably what that personal consumption expenditure kind of number, you notice that the market was looking for 3.6, came in a little bit higher, but a substantial drop from the previous reports number there. So on balance, the talking heads, the government officials, all that kind of stuff, they're probably going to be happy with these kind of data points. And if I understand correctly, I mean, I went on at length about the Canadian real estate market and how dangerous it looks. You've heard me barking about that for a while. Maybe this will probably give the Bank of Canada an excuse to maybe just leave interest rates alone for now rather than any more increases. But as I had sort of said to you at the beginning of this broadcast, with this kind of number, it's awfully hard for me to understand that the Fed's actually going to think about lowering rates. There's no reason whatsoever for them to be lowering rates. Market was looking for a drop of 0.9%, and it came in almost a 2% increase, 1.7. So quite a substantial uptick there. And then over the past later on, as sort of the morning developed, we had consumer confidence as the conference board consumer confidence number come out, and it also came out quite a bit stronger than what markets were expecting. And then the sort of final sort of coup de grace to the morning's data set, new home sales down in the States just going ape shit to the upside here. Market was looking for actually a drop, expecting the housing market to calm down a little bit, and the exact opposite happened. And of course, you know, we've barked about this a lot. The number one preferred asset for international pension fund managers to invest in right now across the entire globe is US, and I suppose to a certain degree North American, although Canada is kind of pricing itself out of the market. But specifically US single family homes, that is the hot commodity. And that's probably, you know, until they actually break something, which I don't think, you know, seeing that kind of number, that's not even showing any signs of slowing down. But until the Fed actually breaks something in the world economy and we actually see things start to fall apart, I can't see how the Fed can even remotely consider lowering interest rates. So there's your backdrop. So with that said, I did like the idea of the stock market moving higher, and I think that read is correct. It's just I fat fingered the trade here this morning because I'm a little bit rusty because I took a week off. Way to go, Brian. So anyway, it is what it is. I suppose, you know, big sort of energy markets that we want to follow. This is going to be an inflationary push here. Crude markets kind of soft on the day, so we're not going to get any real heavy inflationary pressure out of that. And interesting to see how the gold market just can't buy a friend here. I suppose, you know, from a day trader's perspective, we're finally coming back down into a level where maybe I should be taking a real good look at the 3-minute chart and looking for those bull divs. Now that we're starting to come back into support. So my hunch is probably this is actually going to be setting up some sort of trade. Yeah, you can see, well, yeah, a little bit. Yeah, no, it's still nothing really developing solid. A little bit of a bottom there coming in a MACD. I suppose if this thing calmed down, put in a W, then maybe I could justify acting. But actually, this is a really, really good lesson in good old Foggenbaums. As you can see, the pretty well-defined double top. I think I might consider that good market structure. 2.618s, and look where the market stopped this morning, right on that 2.618 level. So this actually would be a pretty reasonable trade location. There's the VWAP just on the day and a prevailing downtrend line, and the 30 period, actually the 200 period SMA off this 30-minute chart. So I think probably for the rest of the morning and probably the rest of today's trading session, if I get something that sets up along those lines, I might consider a long gold long. But I'm like I said, I'm in the bit of the penalty box right now because of my sloppy trading here this morning. So I'm probably not going to do anything more day trading wise. But if you can use that, if you want to hunt that, you know, feel free, be my guest if there's any value to that. Awesome, way to go. So, you know, that's sort of the broader market. I suppose we can probably just finish off just a quick commentary about Bitcoin. As we had sort of said, there was a nice little counter trend rally here first thing this morning on the announcement. I think that BlackRock has basically been approved. Yeah, you know, and actually in the after party, we'll probably talk a little bit more about this. why is this market specifically at this level? Of all levels for this market to sort of run up to and then stop, just sitting right at that 30,000 level. I thought it was interesting. I don't know whether I really believe any information that you see out of, especially like crypto commentary about deribit options. It's a little bit suspect. But the sort of the news headlines, what time is it? They are still okay. The news headline was that this Friday, if I'm not mistaken, I think it's this Friday, but this Friday, where is it? Where is it? Yeah, we were having this conversation last night in the lounge. It was a really good conversation with the AZ contractor and Asif. We were trying to pick apart the 1% plan here. But the headline for Bitcoin was crypto traders eye $6.8 billion in Bitcoin and Ether options expiring. So, and it just because this is, and now this deribit's based out of Panama, of all places in the world to have your cryptocurrency exchange. Yeah, well, it is what it is. But anyway, they were making reference. I don't know whether I agree with this interpretation. Some of the things that and keep in mind, this is from a crypto perspective. And then when you actually go on Deribit and you try and actually find the options open interest information, it's very sketchy at best. I mean, this is the June expiry, and you can see, where do I find open interest? Where's open interest? Where's open interest? And, for an options trader, remember, I used to be an options broker. Yeah, you have to have open interest. You have to know what the hell's going on with these contracts. So a little bit sketchy, this data from Deribit, but, it's crypto, so get used to it. The point here is that we did notice that there is a huge open interest in these $30,000 strike price on the Deribit exchange that are expiring basically this Friday, if I'm not mistaken. But to give you an idea, and is there correlation to this? I think there is. We can use this BITO. Keep in mind that Mr. Of course, BlackRock now, he's going to corner the ETF market for the U.S. market. Not a big surprise that everything else gets completely sort of rejected, and then all of a sudden, Mr. BlackRock comes along and says, "I want to do it, and I own all you politicians," and all of a sudden they just jump, right? But this BITO has been trading away on the U.S. exchanges for a while now, and I've been using the options information for this. I think it works pretty well. And what do these guys do? They actually own basically Bitcoin futures. So in essence, I think it's a perfectly good proxy on Bitcoin, and it is exchange listed. So as a result, these guys have to report the data, and there's no funny business like you often see with crypto. And wow, we can't give you open interest data because we don't want to give it to you. But notice, and you've heard me talk about this before, and this person asked me specifically to speak on this, but here are the June options. And this is an interesting one because the rest of the market, they're not really interested in this. This is a weekly option series, but look at the heavy open interest here in this BITO, and you can clearly see $18 is that massive call wall. And you often hear Julian talk about max pain kind of idea. But just think of it this way. If the price is above all of these levels into expiry, then these options actually are worth something. But if the price is below all these levels into expiry, then the options are worth nothing. So is there an incentive maybe for Wall Street to manipulate the price of Bitcoin to make it so that it goes out at certain levels? My hunch is they probably don't want Bitcoin to go out above $18 on this exchange traded fund. That's my hunch. We'll see what happens. Maybe 17. I don't know. But That's a lot of open interest for just a stock weekly options expiry. That very rarely happens. So my suggestion to this other person was, I think there's probably a lot of people that bought Bitcoin down at the bottom. And of course, if you look at the ETF, you can see the ETF is sitting basically at $17 right now. So I don't think it's a big surprise that the market is basically sitting right at those strikes. And then also think about it just in simplest terms. If you bought this ETF down at the bottom, $9, whatever, is there incentive for you? We all know, of course, that 50% rules, and really I might even maybe we'll even go off of this high here. But notice 38.2s, 50% levels, all up into that area. I mean, maybe we get up into there. That's a tough one. But if you bought this Bitcoin ETF or you bought Bitcoin itself, it's the same logic on the weekly charts. If you bought here, would you be incentivized to maybe write those call options? And if the price of Bitcoin does go out up top here, then you just simply have the asset just called away from you. And let's say you bought, let's say you bought the double bottom at $10 here. And then you wrote like the $18, $19 calls like we just showed you a moment ago. Would it make sense that maybe you collected a buck or two on those $18, $19 calls? That in essence means that your average selling price, if the asset's called away from you at this $17, $18, is like 18, 19, 20 bucks, which is just about a double off of the lows. So it doesn't surprise me that there is heavy open interest up at this level. And if anything, for Wall Street, makes perfect sense. They buy their Bitcoins at the bottom. They're just sitting there writing the June calls. And if the market does get up into that double area, notice 18 and a half, and the lows here were like 948, right? So that would be like 19 bucks. So if the market does get up into here and, let's say they wrote the 17s, they collected $2 for that, right? Then that means that they're selling at 19 bucks, or basically double off of their lows. So it doesn't really surprise me what's going on there. I suppose we'll talk a little bit more about that in the after party if we have some time. But somebody was asking, like, Brian, there's a huge open interest in the call options that are coming due here on Friday. Does it make sense that they bid the market up basically to those strikes and then they've just parked it right at that level? And frankly speaking, I think it makes perfect sense. And then, of course, if we want to look at the other side, I didn't put this in the room, but using the BITO, which is, of course, exchange listed. So I think you can at least trust the data that you're seeing here. If we look at the put side of the equation, my hunch is that you're going to see a lot of the puts, the heaviest open interest, they're all going to expire worthless. So here we are, 3 days till expiry. There's that. Look at that. Now it's up to 9,000. So they're writing these calls like there's no tomorrow. And this is interesting on the put side. Notice $17. Is there incentive for them to get this market above that $17 into expiry with that huge 10,000 open interest here? Because keep in mind, if they settle this thing at 1701, all these 10,000 options all expire worthless. So my hunch is, yeah, there's a lot of incentive for them to get this market above that $17 mark. And where are we right now? Keep in mind, this thing expires basically in 2 or 3 days. We're at 1718. Wow, what a surprise. So I don't really see anything out of the ordinary going on here. Somebody in particular did ask me to speak to that, and I thought I'd just mention that this morning. And of course, like I said, we can always talk about that a little bit more in the after party. So here is the Bitcoin price chart. We have talked a little bit about how this is looking a bit nosebleedy. If we pull up our momentum, and there, of course, is the, I mean, what a sales pitch. It actually, you know, I just showed people this the other day, and I think we had like 3 or 4 people sign up for the algo service. Just basically based on that. I mean, that's one hell of a signal, eh? That's crazy. But now, and I'm not going to show you what the algo looks like right now. If you want to know, sign up. But now, you know, just to give you an idea, some scripts that we write, you know, help us sort of see the market state. Of course, I'm a big fan of location, indicator confirmation, price structure, go. So I think we definitely have trade location to think about shorting, selling against highs, that kind of idea. Do we have indicator confirmation? And boom, that's a few divergences. We got like 6 different confirmed divergences here. It's interesting how we did get one bullish divergence that came in here overnight. But for sort of swing trading purposes, I am very interested in hunting. If I can get a nice little M that can come in up top here, especially through that options expiry, something along those lines, I love that trade. So if anything, I think that they've parked the market up top here into the options expiry, which makes perfect sense. There's that huge event happening on Deribit. You can see the validation of the data on this BITO, this ETF, and their open interest levels. I think it makes perfect sense why the market is where it is. But what I would say is once this event is out of the way, 3 days, what's fascinating about this is let's look at the next weekly expiry. Just to give you an idea, once this expiry is out of the way in 3 days, do they have to worry at all about any kind of options expiring in the money? Look at the drop off in the open interest here. I mean, it just completely disappears. And then even on the puts, look at it, just completely disappears. And interesting too, that literally what this is saying, by next week, they could bring the market, this ETF, all the way back down to 15 and change, and they won't have any issues here whatsoever. So you could literally see following that expiration event in 3 days, this option expires in 10 days. You could very easily see the market fall like 10% here. No problem into next Friday's options expiry. And of course, they'll be perfectly happy. So I don't know. Hopefully that gives you food for thought to think about what's going on here in the Bitcoin price and why Bitcoin just mysteriously happens to be just parked right at this 30,000 level here into this options expiry this weekend. Isn't it an accident? I don't think so. Okay, that's about a half an hour. Hope you got some value out of that. I still think that we want to get on the other side of this holiday weekend before we all start getting uber bullish. There might be a nice little swing trade here, like I said, hunting a nice little M following the options expiry for a pullback back into moving average support. I can see that. It does make sense to me. So I'll be hunting for that. But, you know, as I said to you yesterday and in previous sessions, you know, if we do correct here, and of course, if we're thinking bots, then we're thinking we want to see at least 33%, no more than 66. So if I can get some sort of correction in here, 1 low, 2 lows, 3 lows, I can actually then start thinking about, all right, we're getting ready to rock and roll here. But in the short term, I'm still sort of just sitting here going, you know what? I'm from Missouri. Let's let this develop a bit more, especially with all of these divergences still here. I think I just want to leave this thing alone and just let it simmer a bit through this options expiry here on the 30th. Okay, have yourselves a great day. Come and join us for a really good conversation with Sjord, TRI-CTO in the after party. And we'll, of course, see everybody for tomorrow. We'll have our Stock Pickers Club meeting tonight. So we'd love to see all of you there for that, all you site OGs. And we'll get to touch base with David O. I haven't talked to him in a bit. And we'll see what he's looking at in the market. All right. Have yourselves a great day. PMA for the win. All the best. And bye for now.